Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 16th of November to the 20th of November 2020. Before we start, I have a very exciting announcement to make for you all. Over the last year, we have been working on a free trading course which covers macroeconomic fundamentals, technical analysis, including best practices for drawing support and resistance levels, which is something I get asked quite a lot, and also risk management principles. The course itself is a big course, so it's a serious course. Just because it's free, it is not a gimmick, it is a serious course. And it looks currently to be set over 50 modules, which is hundreds of lessons by the time we launch this, covering stocks, currencies, commodities and bonds. And it also comes with a ton of spreadsheets, which everybody will have access to as well. So our goal has been to put together the best free trading course on the internet, so all traders can have access to education which is going to provide them with all of the tools needed to be successful in the financial markets. I can absolutely guarantee you will never look at the markets in the same way again once you complete this course. If you're serious about trading, you're not going to want to miss this. We're going to be launching the free course and also a new platform to host the free course on the 7th of December. So you can put that in your diaries and think of it a bit like being an early Christmas present. As the markets start to wind down in December, everybody will have a chance to go through the material and get ready for the new year in 2021. We are going to be changing over the name of the YouTube channel on the 23rd of November. So not this Monday, but next Monday. And that is because we'll also be covering stocks, commodities and bonds, not just Forex. So the name doesn't suit what we'll be looking at once we launch this new content. So if you want access to this, you must subscribe to the channel at least until the 23rd. If on the 24th you want to unsubscribe, that's fine. But at least until the 23rd, you're going to want to subscribe to the channel if you want to get this when it launches, because this means that we will be on your subscriptions list when we change the name on the 23rd. So you'll definitely be able to find us that way, even if we change the name. Whereas if you are not subscribed by the 23rd when we change the name over, you may have difficulty finding us under the old name. So you're going to be able to tell that it's us in your subscriptions because my picture will remain in the thumbnail, and also I'm sure you'll recognize my voice, and there'll be other features that you'll be able to recognize as well. So please make sure you hit the subscribe button at least until the 24th of November to make sure that you don't miss out on this huge content release. So with that said, I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we highlighted the fact we did have a sell-off after the US election, and we were looking for a correction back towards the 93.86. We have had a nice correction, and we're now sitting in an area where we can start to decline down towards the next key of support to the downside and the target set at the 91.79. This means we are expecting further declines this week in the dollar index, and we go into this week with a bearish bias on the US dollar. And it just simply means that we're going to be prioritizing dollar short positions in the coming week. The next market we're going to look at is crude oil. Now, last week we had a reversal week in crude oil. We reversed back to the upside, and we currently sit above the 36.28. Very simply put, any correction in crude oil this week towards the 36.28 is going to be viewed as an opportunity to look for bullish breakouts in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at 43.70. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 46.49. The next market we're going to look at is euro dollar. Now, last week we were looking for a pullback towards the 1.16530, and we did get a nice pullback last week, and we're starting to break to the upside again in this market. Any further correction in this market is simply going to be viewed as an opportunity next week to look for bullish breakouts, and we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.2054. The next market we're going to look at is pound dollar. Now, last week we highlighted the fact we were looking for bullish setups in this market, and we're looking for a rally into the 1.3267, which was the key area of resistance and the target for last week. We did take out the 1.3267, which was roughly here, and we started to sell off from this key area of resistance. And this correction now this week is going to be viewed as an opportunity to look for bullish setups once again in this market. Any deeper correction, and the deeper the better, as it always gives us better risk to reward opportunities to the next key of resistance. Any correction in this market is going to be viewed once again as an opportunity to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.3355. So the next market we're going to look at is US dollar yen. We had a big rally to the upside, actually reversed this market last week off the back of the apparent development of a COVID vaccine. And this is what caused the spike to the upside in the US dollar Japanese yen. It actually finished off a potential chart pattern known as an expanded triangle, or this kind of megaphone type pattern. This is actually the worst type of pattern you can see in the markets, really. It causes or shows extreme indecision. And because of that, you can also see the dollar is actually stronger, technically speaking, than the Japanese yen going into next week. We should technically be looking for bullish opportunities in this market as the price comes back down. This would be our opportunity to look for a setup as a right shoulder. However, because of this pattern and because of the fact that the dollar is actually overall bearish going into next week, we would really only want to use this for the information it gives us regarding the Japanese yen. So if you are looking to trade this, the better direction to trade this would be technically to the upside as we pull back to the 103.73, up towards the 105.78. But because of how this is developing and because we have a weak dollar, I will personally be leaving this chart next week, and I'll be not participating in the US dollar Japanese yen as a market, and instead just taking note that the Japanese yen is also a weak currency alongside the dollar going into next week. This may be something you want to look at with, say, Aussie yen to the upside, Euro yen to the upside, etc. The next market we're going to look at is Aussie dollar. Now, last week we started the week in this area, and we're looking for a correction to set up some bullish moves to the upside in this market. We pretty much did nothing in the Aussie dollar. We kind of moved sideways and then we started to drift lower. So going into this week, this is now setting up as we start to correct potentially even deeper for an opportunity to look for bullish breakouts in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at 0.7393. The next market we're going to look at is New Zealand dollar. Now, last week we were looking for a rally to the upside in New Zealand dollar, and we highlighted the 0.68260, which was right here. And we did trade into this target and we started to correct in New Zealand dollar last week. Very simply put, going into this week, we're starting to correct away from the next key of resistance. So any further correction in this market, once again, going into this week, is simply going to be viewed as another opportunity to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at 0.6938. The next market we're going to look at is US dollar Swiss franc. Now, last week we highlighted the 0.91720 as an area to look for the market to pull back into, and you can see we did come and pull back and test this area before starting to sell off to the downside. For anybody not involved from last week, any correction back towards the 0.91720 is going to provide another opportunity to enter to the short side in this market. And if we start to pull back, we're going to be looking at initiating shorts once again, down towards the next key of support to the downside and the target set, the 0.8984. And if we can get a break through here, although it may take a couple of weeks, we're going to be looking down towards the next key of support to the downside and target 2 at the 0.8838. So just to clarify, it does look like we'll be coming down to the 0.8984 next week, but it may take 2 weeks to come down to the 0.8838 if we can break this key of support here first. The next market we're going to look at is US dollar CAD. Now, last week we were looking for short positions in this market down towards the next key of support highlighted in last week's video at the 1.29520, which was right here. We did have a really nice sell-off into this key of support, and this was almost to the pip where we bounced last week. This bounce is now, since the trend is still to the downside, providing us with a second opportunity to look for bearish setups in this market. And if we start to break to the downside, we're going to be looking at initiating shorts once again, down towards the next key of support to the downside and the target set at the 1.2801. And last but not least, we have gold. Now, last week we had a big sell-off in gold, and this was very similar to what we saw in the US dollar Japanese yen because of the vaccine news. Going into this week, therefore, gold is currently now structured to the downside because of this, and it means technically we should be looking for short positions in this market. If the dollar is weak, any short positions in this market may struggle. So you could use this as a synthetic hedge play where you short gold, for example, and go long euro dollar. And then if you're 2-to-1 risk to reward ratio and you lose one trade and you win another, you make one overall. Or if you really want, just like the US dollar yen, you can leave this altogether if you think that the dollar is going to devalue next week, because that is not going to help any gold shorts if we do get a sell-off as we're looking at in the dollar next week. So very simply put, for anybody who still does want to trade gold, we would be technically technically looking for a pullback towards the 193606, and any reversal to the downside would be viewed as an opportunity to start to look for bearish setups in this market, and we'd be looking at initiating shorts down to the next key of support to the downside in the target set at the 1815.22. Personally, I will probably be looking just to filter US dollar yen and gold from my trading next week. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. Remember, we are changing the name of the channel on the 23rd of November, and so if you want to make sure you can still find us and you want this free course when it launches, please subscribe to the channel at least until the 23rd of November, so we will be in your subscriptions when the name changes and you can find us very easily. With that said, I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.